Guess what we will be doing today? We will be performing a new full multi-time frame analysis breakdown. So we will be taking a pair as usual, analyzing it both from a technical and order flow perspective, and by the end of the video you will know exactly which is the best zone to be looking for a potential trading opportunity. Now if you're new to the channel, I'm a top author on the TRADINGVIEW platform, and every single day I share new free education and analysis. So I really suggest that you do subscribe to the channel so you won't miss out on all this free education, and I will see you in the video. The pair that I want to speak about in this video is NZDUSD. Now, why do I want to speak about this pair? Because first of all, it's definitely time for an update on the situation that we have on the pair from our previous analysis. And second of all, because the analysis on NZDUSD at the moment will be very educational, because you will learn some very important concepts when it comes to technical analysis and swing trading in the market consistently. So let's start our analysis obviously from the monthly, the weekly, and the daily timeframes, which are the best timeframes when it comes to the direction of the market, obviously combined with the COT data, which is the commitment of traders. So what the biggest banks and institutions are currently doing in the market. And then we will go and see what we have from a 4-hour perspective, which is the best time frame when it comes to entry to find high risk to reward opportunities. So more than 1 to 3 risk to reward. So let's start our analysis on the monthly, and as usual, I will keep it as educational as possible. So from the monthly time frame, what is the situation? Now we see that here the market created this pattern: impulse, correction, lower low, and equal high. Now after you see a market create a pattern like this, so impulse, correction, lower low, and equal high, what do you expect? You expect from this equal high for the market to make a move to the downside and then create a move to the upside to basically form this inverted head and shoulders. Meaning that from this area here, we expect the market to give us a wave to the downside from a monthly perspective to then create this inverted head and shoulders. Meaning that we can expect this market to be bearish for a few months to actually create this wave to the downside and create the right shoulder of this monthly formation. And we also know that the previous high is a strong level of supply for this market. Why? Because from here the market has started all this move to the downside, and currently we are seeing a retest of this exact same level, from which we can definitely expect a move to the downside. And in fact, that is exactly what the market is currently doing. Going down on the weekly, what do we see? Now from a weekly perspective, situation is extremely clear. We have an impulse, a correction. The market created a higher high with another impulse that tested the strong supply, from which we definitely expected the market to give us this move to the downside. And currently, it seems like the market is breaking all structure back to the downside. Now, what did we expect from here to make this move to the downside? And how did we expect the market to actually create this move to the downside? Well, going down on the daily, you will remember what we said in our previous analysis. In our previous analysis, we said clearly from a daily perspective, the market has created this overextended W formation. And after an overextended W formation, which is testing strong monthly supply, because don't forget that inside of this area, we have the monthly supply that we have identified at the beginning of the video. So after this overextended W formation that is testing this monthly supply, we want to see the market give us a move to the downside. And that is exactly what the market did. Specifically, we also said how we wanted to see the market make this move to the downside, because we had identified that in this impulse to the upside, there is one candle which is not related to the move, which is exactly this red candle here. And after a market in an impulse to the upside creates one candle which is not related, this will be a structure candle. In our previous analysis, we said we want to see the market break below this area from a daily closing perspective, which the market did with this red candle. And then we want to see the market go for a retest of this level, which is exactly what happened here before the continuation to the downside. And that is exactly what the market did. So the market respected perfectly what we wanted to see the market show us. And I will link this previous analysis in the description so that you can go and check it out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next video. Let's now explain what is next for NZDUSD. Where is the next opportunity for this pair? Now, if you remember from the monthly, we have already said that we want to see more continuation to the downside for a few months to create that right shoulder. And what we can also see here from the daily is that the market has created new structure. Why has the market created a new structure? Because in this move to the downside, there is one candle which is not related to the move as well, which is this green candle here, which shows that the market at this area had found support. And this support is now turned resistance inside of this zone, because previous support, once it is broken to the downside, is turned resistance. And how we will be approaching a situation in which we have resistance, we have a nice impulse to the downside, and we have a downside target from a monthly perspective. Well, before I show you that, let's first go and give a quick check at what we have from a COT perspective on NZDUSD. So what the biggest banks and institutions are currently doing in this market, on this pair. Now, if you want informations on NZDUSD, what you actually have to go and check is the NZD. Why it is simple, why you only have to check the NZD to actually have informations on NZDUSD? Well, the simple reason for that is that all currencies on the spot are traded against the USD. So if you want information on NZDUSD, you simply have to check the data for the NZD, and you already have informations on NZDUSD. And what we can see with the last reports is that institutions went from having minus 1.4k net positions to having now plus 6.9k net positions. So we went from having way more shorts than longs with 20k shorts and 18k longs to having now way more longs than shorts with 21.4k longs and 14k shorts, with 1.6k longs added with the last report and minus 1.1k shorts getting closed. So the NZD/USD is still pretty strong, and in fact, we all remember the huge trend which the market has developed here from a monthly perspective. And clearly that is the reason for which institutions were adding all these longs on the NZD/USD. If we remember here, we were all the way down at minus 20k net positions, which increased all the time, which is the reason for which the market created all that move to the upside, because institutions have been adding longs on NZD/USD. However, what we can easily see with the new report that will come out on Friday, we can easily see if institutions have been closing longs and opening shorts. If that will be the case when the new report will come out, we will know that institutions started closing their positions, started liquidating their longs around this area, because they will be preparing to create this move to the downside. So we still have to see that. We still don't have it here reported, but if with the next report we will see this happening, so longs getting closed and shorts getting opened from an institutional perspective, we can definitely expect the move to the downside. And with students, we will be ready for that. So after this impulse, we expect the market to give us a correction to this area. And after the retracement, or better said, during this retracement, what we will be doing with students. Now, during this retracement to the upside with students, we will be monitoring price action from a 4-hour perspective inside of this area. So we will be waiting inside of this zone for the market to shift from a bullish market that is creating higher highs and higher lows to a bearish market. And when the market will shift from a bullish to a bearish market, we will wait for also the environment of the market to shift. And after the market will be shifting from a bullish to a bearish market, we will add NZDUSD to our watch list. And as soon as the market will provide to us one of our valid entries with students, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and for the market to actually complete this impulse, correction, and impulse pattern to the downside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. In fact, every single day I give you a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, take profits, as well as having me answering all questions that you have every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out, and I will see you in.